much.
Yo, what's up guys, your boy IpBoyles back again on this YouTube channel. And this video I'm going to teach you guys how to trade profitably. If you are a university student and you are learning trading, or you are learning how to start your forex trading business right away, if you are a beginner trader, the first thing I advise you is to, once you are starting a forex trading business, you must make sure that you must have something that generates money to you. You cannot start forex trading without having something that generates money, because you do a lot of accounts when you are starting. So let me tell you a big story about myself. When I started, I was doing some job which I generated some money for myself. That's the money I started with. Then my first deposit was about $100 I deposited in my account. Then that $100, I grew down $100 from $100 to $150. From there, I did my first withdrawal. I have to reinvest that money into my YouTube channel, into some business. Let's just say that you are trading and you want to make profit and you don't have something that is backing you up on your trading journey. It will be like you are trading with your whole capital, which is not very advisable as a trader to trade with your back end capital, because if you blow that amount, you go back to your bankrupt, you run bankrupt, or you go back to your family people asking them for money, so which is not really that advice. So just look for a mentor that will teach you. You pay for a month's time or 3 months time, that will teach you what it takes to be a profitable trader. You know that there's something we say, risk what you can afford to lose. So as a beginner trader, or as an entrepreneur, or as a businessman you don't want to risk whatever you can afford to lose. So that's why I said risk whatever you can afford to lose. Make sure that whenever you're putting capital in your trading, that you are really risking what you can afford to lose. Let's say you have $10,000 in your trading. Whenever you're trading, don't lose more than 1%. I'm going to give you this tip, is that if you are a beginner trader or you're an advanced trader, you have learned a strategy, you have passed through a lot, you have blown so many accounts in your early learning, in your early days where you are learning how to trade. So my advice for you as a intermediate trader or as a professional trader, you always want to go for a pro-firm account. Pro-firm accounts are accounts whereby a company gives you pay a little amount of money, then a company gives you a big amount to trade. So all you get to do is to just pass their challenge. They have phase 1, phase 2, and these days is whereby pro-firm doesn't count days where you trade. These days pro-firm has unlimited challenge, whereby you can pass it at any time, at any comfort, without no being pressured or without having days limited for you to pass their account. So go for a pro-firm trading where you make some amount. Then let's say that right now dollar is about 1,000 something, yes, about 1,020 naira right now. If you can make up to 1% of $10,000, you know how much it is. It can go you a long way. When you withdraw that profit, it's like you being a don for yourself. So that's why sometimes you kind of go for pro-firm whereby you make some profits. Just make sure you pass their challenge, and once you pass their challenge, try to make profit for yourself. And once you make profit for yourself and try to withdraw, always make sure you withdraw your profits, withdraw any amount it is, because these days once you can withdraw any amount, it will go you a long way. And make sure you subscribe. It's your boy IpBoyles signing out on this video. We'll see you guys on the next one.
This is the record of the trade I took on Friday, and which I'm going to share with you guys how I took this trade and how I catch the peep on this video. Once you identify a trade opportunity, all you get to do is to just make sure that your confluence are very correct. And once your confluence are correct, all you get to just do is to know your risk reward, know what you're about to risk on that trade. And right away in this trade is kind of, I had a first entry at the top of that week. Then I have to surprise returning back to my zone, or I can call it my supply zone. Then all I have to do is to just wait price to return there, where I can just place the second entry, and which you can see the blue candle coming straight away. So all I did in that to be on my favor is to just break even, just place stop loss beneath the sales that I was doing already, so that I can protect those ones, and those positions will be running risk free. The second entry I had was below the 78.6, and which price came through right the 78.6% of my Fibonacci, and that where I entered manually. Although I was trying to place a sell limit, but price was already in that zone, so all I had to do is to just place a manual sell order, and immediately all I have to do is to just place my stop loss above the wick of my first entry, and wait patiently to see what price can do. And right away you can see price started tanking. Immediately I placed that sell limit. So what I really understand is that once you have a running position in your favor, all you have to do is to just make sure that the second position you are placing have to be must be 50% or half of the first entry. Let's say you entered one lot size. You can see at the top I entered 0.05, 0.5 at the top 2 times. That's 2 position, which is one lot. So all I have to do is to just place a new 0.5 lot size, so that's half of one lot size. So I have to leave it to run and see how many pips I can catch. Although I catch about 20 pips, so immediately it reached 20 pips, I had to close all my position. So watch on this video and see how everything goes, and see how the candle was tanking, and how I was waiting patiently to see that price hit my first CP,